Welcome to our deep dive, into the sometimes intimidating but always fascinating world of technical analysis.
Yeah.
You've shared some really interesting stuff with us from El Manual de Técnicas Análisis. I think that translates to like the Manual of Technical Analysis Techniques or something like that.
Yeah, that sounds about right.
It's a book that promises to I don't know, unlock the secrets of reading those charts and, really understanding those market trends. It's
Exactly.
kind of like a practitioner's guide for anyone who wants to, make better decisions when they're trading, right? Potentially spot those buy and sell points that we're all, hoping to find.
That's right. It really aims to give you the knowledge to sort of anticipate those market shifts,
Yeah.
based on patterns and all that data that's out there.
Okay, so much of trading is about, trying to predict the future, but is that even possible? I mean, why even bother, especially with something as, unpredictable as the stock market? Are we really just chasing a mirage here?
Well, think about it this way. We humans, right?
Yeah.
We're driven by instincts, survival comfort, the need to keep things going, keep the species going.
Right, propagate.
Yeah, propagate, exactly. And all these primal urges, they influence everything we do, even in the financial markets, believe it or not.
So you're saying our basic instincts drive market behavior. That's a pretty fascinating thought.
Exactly. And that's where this idea of technical analysis comes in.
Mm.
It's all about recognizing those patterns in human behavior, but reflected in the market data.
Okay.
If we can understand those patterns, then maybe we can make better decisions when it comes to trading.
All right, you've got me hooked. So how does this actually work in practice? The book keeps mentioning this idea of, buy low, sell high, which sounds simple enough, but, it's definitely easier said than done, right?
Oh, absolutely. And figure 1.1 in the book, it really illustrates this. It shows how technical analysis is trying to pinpoint those optimal moments to buy and sell,
Oh, okay.
but it's all about timing.
Okay, so let's talk about one of the foundational theories, I guess, in technical analysis, Dow theory. It's named after Charles Dow, a real pioneer, I think, in, understanding those market trends.
Yeah, his work is still super relevant today.
Right.
It really shapes how we interpret those movements in the market.
Okay, the book breaks down Dow theory into 6 core tenets, I guess, principles.
Right.
The first one is that markets discount everything, meaning that, the prices, they already reflect all that known information.
Hmm.
But what about those unexpected events? Those acts of God kind of things?
Yeah, you're right. Those random events, they're impossible to predict.
Yeah.
But Dow theory really focuses on the bigger picture,
Mhm.
those underlying trends that are driving market behavior.
Okay, so the second tenet says that the market has 3 primary trends, bull, bear, and sideways. And each of those trends has 3 phases, accumulation, participation, and then distribution. What's the significance of these phases?
Well, those phases help us understand like the life cycle of a trend. It's like watching a wave building crest and then crash.
Interesting analogy.
Right. So the third tenet is that these trends persist until there's evidence of a reversal. So how do we know when a trend is truly reversing?
Well, that's where the fourth and fifth tenets come in. Volume has to confirm that trend. And we also need confirmation from, other indexes or even other markets. It can't just be about, one stock in isolation.
Right. It's all about, that bigger picture.
Exactly. It's about understanding those underlying forces that are driving that market direction.
Got it. And the final tenet emphasizes that Dow theory focuses on those major market swings, not those small, everyday fluctuations.
Precise.
The book is a really fascinating example of Dow theory, and action figures 2.1 and 2.2 show how the price of gold reacted to the events of September 11th, 2001.
Mhm.
I mean, talk about a random event, right? What do you think the market was trying to tell us in those charts? It's incredible how quickly those prices adjusted.
What's fascinating here is how Dow theory gives us a lens to kind of interpret those events that seem, utterly unpredictable at the time.
Take a look at those charts yourself. Does this support or challenge that idea that markets discount everything?
Hmm.
What stands out to you?
Now let's shift gears a little bit and talk about, the visual language, I guess, of technical analysis charts. They seem so intimidating at first, but once you kind of understand the basics, they can be pretty insightful.
Absolutely. The book dives deep into all those different chart types, line charts, bar charts, candlestick charts. Each one gives you a unique way to sort of visualize that price action over time.
And it all starts with that OHLC data, open, high, low, close.
Right.
It's the raw data that's used to build every single chart.
Think of it like the building blocks of technical analysis.
Figure 3.2 illustrates how we break down those continuous price movements into those specific time intervals. This is called quantization, I guess.
Oh.
And this creates all those different charts, 5-minute, hourly, daily charts, each giving us a different perspective.
Yeah, choosing the right time frame really depends on what your trading style is and what your goals are. For example, a day trader might focus on those 5-minute charts, whereas someone who's investing long-term, they might look at monthly charts.
Makes sense. And we can't forget about scaling, linear versus logarithmic scaling. That can really change how a chart looks and how you interpret it.
Right. Figures 3.8 and 3.19 show how that same data can look totally different depending on the scaling. It's like looking at the market through a different lens.
Okay, so we've got all this data, these fancy charts, and, these time-tested theories. But here's the thing. Technical analysis isn't an exact science, is it? There's definitely an element of subjectivity involved.
You're right. It's not just about, plugging numbers into a formula. There's definitely an art to it.
Right, an art to interpreting that data and drawing those conclusions.
Exactly.
So how can something based on objective data, on hard numbers, how can it be subjective? It seems like a paradox.
Well, it really comes down to 3 key areas. First, the choice of, which analysis techniques to use and which indicators.
Right.
There are hundreds of options, and each trader might have their favorites.
So it's like having a toolbox full of tools, and you have to choose the right one for the job.
Exactly. And then there's the whole part about interpreting those patterns and those signals. What looks like a clear buy signal to one trader might look like a sell signal to another.
Right. It's all about perspective, I guess.
Exactly. And then the final area of subjectivity is figuring out those entry and exit points, where you draw those lines on a chart that directly impacts your decisions. Even the slightest shift can make a huge difference.
Wow.
And figures 1.17 and 1.18 in the book, they highlight this perfectly.
Okay.
They show conflicting signals within the same chart. What stands out to you when you look at those examples?
It's like those optical illusions where you see two different images depending on how you're looking at it. Our individual biases and experiences, they inevitably influence how we read those signals.
Precisely. And this is where discipline comes in and having a solid framework. The book offers tools and techniques to help minimize that subjectivity and help you make more rational decisions. But, you'll never fully eliminate that human element.
That human element is what makes it so challenging and so fascinating, right?
Absolutely. And speaking of fascinating challenges, we can't talk about technical analysis without addressing the elephant in the room, the efficient market hypothesis, or EMH.
All right, let's unpack this EMH beast.
Okay, EMH basically argues that all known information is already reflected in those market prices. So trying to predict future price movements is pointless.
So if EMH is true, does that mean that technical analysis is a waste of time?
Well, it's not that simple. EMH comes in 3 different forms, weak, semi-strong, and strong, each with different assumptions about the information used by market participants. And, even proponents of EMH acknowledge that markets aren't always perfectly efficient.
So there are cracks in the EMH armor.
Exactly. If you look at real-world market behavior, like in figures 1.27 and 1.28, you see those gradual adjustments to new information, not instant discounting like the theory suggests.
So there's still room for technical analysis to add value, even in a world where EMH, holds some sway.
Absolutely. Technical analysis can help us identify those behavioral patterns and those market inefficiencies that EMH might overlook.
So it's not an either situation. It's about understanding the limitations of both EMH and technical analysis.
Precisely. Both offer valuable insights into how markets work, but neither one tells the whole story.
We've covered a lot of ground here. Dow theory charts the subjectivity puzzle, the challenge of EMH. It's clear that technical analysis is complex, it's evolving, but where do we go from here? There's so much more to explore.
There is. And in part 2, we'll dive deeper into those specific tools and techniques that traders use to analyze those markets. So stay tuned.
All right, looking forward to it. Welcome back to our deep dive into MANUAL DEL ANALISIS analysis. In part 1, we explored, those core principles of technical analysis. We went from Dow theory all the way to, the art of reading charts. But you probably gathered by now that we've only just, scratched the surface of what this book really has to offer. There's a whole universe of tools and techniques just waiting to be explored.
You're absolutely right. This book really goes deep into the nitty-gritty of technical analysis, exploring a huge array of indicators and strategies that traders actually use to navigate the market.
It's a bit like learning a secret language, wouldn't you say? All these patterns and signals that might seem like gibberish to the untrained eye.
I love that analogy.
Yeah.
It really is like deciphering a code, learning to read those subtle cues and whispers of the market.
But with so many different techniques and indicators out there, it's easy to feel overwhelmed. Where do we even begin? What are some of those, essential tools that every aspiring technical analyst should have in their toolkit?
Well, I think it's helpful to think of it in layers.
Hmm.
You have your foundational tools like trend lines, which we talked about earlier.
Hmm.
Remember those simple lines connecting the highs and lows? They can reveal a lot about those support and resistance levels.
Right, and how those trend lines can signal, those potential reversals or continuations in the market. It's amazing how much information can be, gleaned from something as simple as a line on a chart.
Exactly. And then you have your indicators, which give you those mathematical insights into price action and momentum. Some of the most common ones include moving averages, which smooth out that price data to kind of reveal the underlying trends. And then there's the relative strength index, or RSI, which measures the magnitude of recent price changes to identify overbought or oversold conditions.
Okay, those ring a bell. I've definitely seen those terms floating around, in trading forums and articles. But to be honest, I've always been a little intimidated by them. They seem so mathematical.
I understand that feeling. But remember, these indicators are ultimately just tools to help us understand, market behavior. Think of them as a way to quantify what you're seeing visually on the charts. And the book does a fantastic job of explaining these concepts in a clear and accessible way, even for those who aren't, math whizzes.
That's reassuring to hear. Now, what about those more visual patterns, like the candlestick formations? I've heard so much about, bullish engulfing patterns and bearish shooting stars. It almost sounds like astrology.
Well, there is certain art to interpreting candlestick patterns, but they're based on, centuries of market observation, not the stars.
Tell me more. What makes candlestick charts so special?
Each candlestick tells a story about that price action during a specific period. They originated in Japan hundreds of years ago, and they offer this wonderfully visual way to see, that interplay between the buyers and the sellers.
And by recognizing those specific patterns like a hammer or a doji, you can kind of anticipate those potential reversals or continuations.
Precisely. And the book dedicates several chapters to exploring these patterns, breaking down, their formations and potential implications.
It's a fascinating area of study, and it can really enhance your ability to read, the market signals.
So let's say you've got a grasp of those basic indicators and patterns. How do you actually put all this knowledge into action? How do you go from, analyzing charts to making those actual trading decisions? That's where having a solid trading plan becomes absolutely crucial. It's not just about, spotting a signal and jumping in head first. You need a strategy that outlines your entry and exit points, your risk management rules, and, your overall approach to the market.
Right, because even if you identify a potentially profitable trade, you need to know how much risk you're willing to take,
Yeah,
when to cut your losses and when to take profits. Otherwise, it's just gambling, isn't it?
exactly. And that's why the book emphasizes the importance of backtesting. It's like practicing with a flight simulator before taking a real plane into the air.
I love that analogy. So you're saying you test your trading strategy against that historical data to see how it would have performed in the past. That seems like a smart way to identify, potential flaws and fine-tune your approach.
Exactly. And it can help you avoid those costly mistakes in the real world of trading. You want to make sure your wings are sturdy before you take off, as you said earlier.
So we've talked about indicators, patterns, and the importance of having a sound trading plan. But something we keep coming back to is, that inherent subjectivity of technical analysis. How do we overcome those personal biases and interpretations that inevitably creep in? How do we know if we're reading those signals correctly?
Well, first and foremost, it's important to acknowledge that no trader is right 100% of the time. Even the most seasoned professionals make mistakes.
So it's about being humble and recognizing that there's always room for improvement.
Absolutely. And it's about constantly learning and adapting. The market is dynamic. It's always evolving. What worked yesterday might not work tomorrow. That's why it's essential to continuously refine your approach, to stay curious, and to keep questioning your assumptions.
That makes sense. It's not about finding that one magic formula, but about developing a flexible and adaptable mindset. Now, the book briefly mentions some newer trends in technical analysis, like the use of artificial intelligence. What's your take on that? Is AI the future of trading?
AI is definitely shaking things up in the trading world. These algorithms can process huge amounts of data and identify patterns that humans might miss, but I don't think AI will ever fully replace human traders.
Why not? It seems like AI would be more efficient and less prone to those emotional biases.
Well, AI is a powerful tool for generating insights and identifying, potential opportunities. But ultimately, it's still up to the human trader to make that final decision. They bring intuition experience and risk management skills to the table.
So it's more of a partnership than a replacement.
Exactly. It's about leveraging the strengths of both human intelligence and AI to make, more informed trading decisions.
This is all incredibly fascinating, but I'm also starting to realize just how much depth there is to this field. We've barely scratched the surface. What are some of those other key areas that El Manual de Técnicas analysis explores?
Well, book goes deep into specific techniques like Fibonacci retracements and Elliott wave theory. These approaches seek to identify those recurring mathematical relationships within those market movements.
Wait, so you're saying there might be a hidden mathematical kind embedded within market behavior? That's mind-blowing.
It certainly is. Whether these theories perfectly predict the future or not is debatable, but they offer valuable frameworks for understanding how markets move and cycle through those different phases.
Okay, now I'm even more intrigued. This is definitely an area I want to explore further.
And we'll delve deeper into these fascinating concepts in part 3 of our deep dive assist. Get ready to unlock even more secrets of technical analysis.
Welcome back to the final part of our deep dive into El Manual de Técnicas analysis. It's been quite a journey so far, I have to say. We've explored, the core principles of technical analysis. We delved into that world of charts and indicators, and we even touched on, that fascinating realm of AI and trading. But there's one more area I'm really eager to unpack. This idea that charts themselves have an internal structure, these recurring patterns that can offer clues about, future market movements.
Yeah, you're right. It's like there's a hidden language embedded within that price action,
Way.
just waiting to be deciphered. And El Manual de Técnicos analysis really does a fantastic job of revealing these patterns, showing how they can be used to anticipate those market turns and make better decisions when you're trading.
It's intriguing, but also a bit daunting. We've already talked about trend lines and how, those simple lines can reveal support and resistance levels. But what about those more complex patterns, like the head and shoulders formation or those triangles and wedges I keep hearing about? It's like a whole geometry lesson.
Well, think of it this way. Just like words are formed from letters, these more complex patterns are formed from those basic building blocks of price action. The highs, the lows, the opens and closes that create those distinctive candlestick formations we talked about earlier.
So by recognizing these patterns, we're essentially reading the market story, understanding, those underlying forces of supply and demand that are driving those price movements.
Exactly. Each pattern tells a story. It reveals that balance of power between the buyers and the sellers. For example, a head and shoulders pattern, as the name suggests, it visually resembles a head with two shoulders. It's a classic reversal pattern, and it often signals that an uptrend is losing steam and a downtrend might be on the horizon. Okay, that one's pretty easy to visualize. But what about those triangles, flags, and pennants? How do those formations play into technical analysis?
Those patterns typically represent those periods of consolidation where the market seems to be taking a breather before making its next big move. Think of it like a coiled spring. The price action tightens within that triangle or flag formation, building up potential energy that's eventually released in a breakout either upward or downward.
So these patterns are like clues hinting at, the direction the market might be heading. But how do we know which way that breakout will go? That's where things get really interesting. We have to consider the context, the overall trend, the volume patterns and other indicators to get a sense of, those underlying forces at play. It's like being a detective, piecing together the evidence to solve the mystery of market direction.
So it's not about relying on one isolated pattern, but about building a mosaic of evidence, right? How do you weigh those different signals and decide when to trust your gut?
It's a combination of art and science.
Yeah.
You learn to recognize the patterns, understand their potential implications, and then use your experience and judgment to filter out the noise and make, those informed decisions.
Speaking of experience and judgment, the book also dives into some pretty advanced concepts like Fibonacci retracements and Elliott wave theory. These seem a bit more esoteric, wouldn't you say? Like, are we really going to start talking about the golden ratio and market psychology?
Well, they're certainly not for the faint of heart. But what's fascinating about these approaches is that they seek to identify those underlying mathematical relationships within those market movements, almost like there's a hidden code governing price action.
Okay, now you've piqued my curiosity. Tell me more about these theories. How do they actually work in practice?
Fibonacci retracements, for example, use ratios derived from that famous Fibonacci sequence 0, 1, 1, 2, 3, 5, 8, 13, and so on, where each number is the sum of the two preceding ones. These ratios like 0.618, the golden ratio, and 0.382, they're thought to represent those natural levels of support and resistance in market movements.
So you're saying these ratios, which appear in everything from seashells to galaxies, might also hold the key to understanding market behavior. That's pretty wild.
It is. And Elliott wave theory, developed by Ralph Nelson Elliott back in the 1930s, attempts to categorize those market swings into a predictable five-wave pattern. The idea is that mass psychology drives these waves, reflecting those cycles of optimism and pessimism that play out in the markets.
So it's like there's this underlying rhythm to market movements, these waves of emotion that propel those prices upward and downward. It's almost like we're tapping into the collective consciousness of traders.
Exactly. And whether you fully embrace these theories or not, they offer valuable frameworks for understanding, that cyclical nature of markets and identifying those potential turning points.
As we wrap up this deep dive into El Manual de Técnicas Análisis, I have to say my head is spinning with all these new concepts and ideas, but I also feel a sense of excitement. It's like I've just begun to glimpse the hidden order within the seeming chaos of the markets.
That's the beauty of technical analysis. It opens up a whole new way of seeing and understanding market behavior. And this book provides a treasure trove of tools and techniques for anyone willing to embark on this journey of discovery.
And the journey doesn't end here, does it? It's a continuous process of learning, observing, adapting, and refining our approach as the market evolves.
You've got it. And the most important lesson is to never stop questioning, experimenting, and seeking new insights. The market, like life itself, is full of surprises.
So to all you listeners out there, keep exploring, keep learning, and keep those charts handy. Who knows, maybe you'll discover the next big market pattern or unlock a secret that the rest of us have missed.
Happy trading!
Thanks for joining us.